Perfect. So we have already touched on market structure, order flow, and candle signs. Right now, I want to touch a little bit on the high probability versus low probability. I want to touch on why are we doing this in the first place as well, because I think that is a great mindset shift to have. So let's talk about high probability versus low probability first. When we are talking about high probability and low probability, we always look at bearish and bullish arguments. So when I say something is high probability, everything is going. So market structure is agreeing, order flow is agreeing, candle science is agreeing to one side of the market. So either a bullish or bearish side. You want to always have, you want to focus, especially a filtering process trading plan. Again, a flow trading plan, I know it might sound very vague currently, but that is all things we will go over, don't worry at all. So with a filtering process especially, you want to always be able to filter out the high probability price action. Because you want to be trading in the highest probability price action, always. And that leads you to having a great win rate and a great return. So how can we find the high probability price action? By stacking up bearish versus bullish arguments. So how many bearish arguments are there? How many bullish arguments are there? And that way you can make your draw on liquidity truly mechanical. Because if you use market structure, order flow, and candle signs, and you can only get to bullish arguments and no bearish arguments, then it's almost guaranteed that it will deliver towards that level. When you have that in the market, that is exactly when you want to milk the market. You want to go absolutely crazy, a lot of risk, etc. Not financial advice or anything. We will go over that as well. Don't worry. So right here, let's analyze the high probability conditions on USD/JPY and why I liked it so much. And then you can, for yourself as well, go over the current conditions on the dollar, for example, and see why I don't like that much. So it's all based on bearish versus bullish arguments or bullish versus bearish arguments. Again, the news events currently and the underlying low probability conditions, etc., is not something we will go over right now. The days of the week where you want to be trading are usually Tuesday, Wednesday, and Thursday. That's also based on the economic calendar. That is something we will go over in MMT week as well. So keep that in mind that everything, it will come. Don't worry. We have to start with the basics first. Then right here, high probability conditions are, again, when you can only make arguments for one side of the market. Right here, which argument can we make? Well, we did have an ST going against us right there. But if we were to respect this ST, then this fair value gap, what's the difference between this fair value gap and that fair value gap? There's no difference. There's not something overlapping on this fair value gap higher than what there isn't on that fair value gap, right? So these fair value gaps are equal. They're equal. They're the same fair value gap. There's nothing overlapping. So there's no reason for price to not continue lower off of that fair value gap. So based on candle science, we already had an early sign in this fair value gap that we are disrespecting it right there. Then afterwards, what do we see? We have a new expansion higher right there, just following through on the bullish order flow we already had established. So right there, we can already tell, all right, we filled in this entire fair value gap. There's no reason for us to go lower off of this random up candle right there. So based on the bullish order flow, etc., we are just continuing bullish order flow on the monthly. Here on the monthly, you need to understand there's literally zero bearish arguments. Not one of them. There's no bearish arguments right there currently. So if we continue higher off of this discount rate, because it's the only discount rate that is there on the monthly, perfect. We don't even have to choose. So right here, we have the fair value gap and the order block. Perfect. We don't even have to choose. When we're moving based on order flow from discount to that premium array right there, then this area is where we want to get involved. So everything that is in between, I always see it like it's an in between. And what I mean with in between is that you're in between this high and that area right there. That in between area is where you can do what you want. You just want to click buy, 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 buy all the time. That is your highest probability conditions right there. And of course, You probably guessed it, because you have the monthly in context, and that is the highest time frame we are using. Then right there, we already can argue, all right, we have the weekly already in context as well, because it just wants to continue higher. We already have the daily in context as well. So when you have something in context, the monthly time frame, that is the highest probability price action you can have. Now, what I mentioned as well in the market structure video is that when you, for example, have a fair value gap sitting right there on a daily time frame, and you have this order block as well, then on the 4 hour, you need to be aware of that, because this order flow lag higher right there will likely not hold. And this is when you will see this intermediate term low, intermediate term high, and that bigger retracement from that low to the high right there into the daily order block, and then we continue higher. So you need to be aware of that, because you're constantly combining the time frames. With combining the time frames are truly very beautiful, and they will tell you everything you need to know if you just master the time frames. And mastering the time frames is first off being aware of the time frames that you're using. I already know the 4 hour, daily, weekly, and monthly. Those are the PD rates that I want to trade off of. So I want to follow at minimum 4 hour order flow always. So I already know right there if my 4 hour is in context of my daily, if my daily is in context of my weekly, if my weekly is in context of my monthly, that is extremely high probability. Right here, we had the monthly going higher, and we came off of discount array. So we had context, we had discount to premium array. Then here, weekly, exact same, coming into that fair value gap right there. Discount to premium right there. On the daily, right here, I would argue this is the highest probability price action right there. Daily to premium right there. On the 4 hour, on the 4 hour right there, this is not high probability, but this ST alone is high probability already. Remember the rule that we had when we are coming off of a discount array right there in the form of that daily fair value gap. Can be any discount array, can be a weekly discount array, can be a monthly discount array. When we just have that one ST, that one singular 4 hour ST, then that fair value gap right there is already where you can go into the lower time frame to look for entries. Now that is important to understand when we go into the execution week. So that is the PD rates that you want to use. Then afterwards, if we follow price and we follow order flow, then this low is protected. And then this right here, again, a very high probability fair value gap. And afterwards, high probability. And afterwards, high probability. And afterwards, we reach that high. And then it all sort of falls apart because you don't have that monthly context anymore. And you can see the difference between this price action, this beautiful price action right here, and this price action. This is so beautiful. And this is exactly high probability price action. Now, I just mentioned what we went over in the market structure video as well, was that right here, when you have this order flow lag and there's something on the time frame above it, a discount rate hovering below it. So what I mean by that, imagine an order flow lag. You have an order flow lag on the 4 hour or on the daily or on the weekly. And on the time frame above that order flow lag, so whichever time frame that order flow lag is created on the time frame above that, there's a discount array hovering beneath that bullish order flow lag or above that bearish order flow lag. So, for example, we have a 4 hour bearish order flow lag lower, and above that, there's a daily fair value gap hovering right there. Then just because we have 4 hour fair value gaps lower and this order flow lag, that order flow lag is not high probability. And the reason being for that is because there is on the time frame above it, because the 4 hour needs to be in context of the daily is not agreeing right there with the 4 hour going lower just yet, because the daily will likely do something like this and then continue lower. You can use the same exact context with your daily order flow lag right here and a weekly fair value gap right there, or a weekly order flow lag and a monthly fair value gap right there. And you would use that only with fair value gaps. So only if there's a fair value gap hovering above an order flow lag, or if we flip it around and we have it below an order flow lag, then right there you would not expect that one to hold. That can hold, don't get me wrong. That order flow lag can hold, but it's not high probability to hold. Because which one would you rather trade? This one, where this is the potential of happening, or if we draw another one, or the one pair where we have this happening, then this order flow lag is way higher probability, right? Because this doesn't really have a chance of sweeping again. And if it does, then what is that? Based on candle science, what is that? On candle science based, that is that we are disrespecting. So then you can even expect lower prices. Because price has no reason to return right there. So every time, and that's the whole reason why this whole price action lag right here was high probability. Because on a daily time frame, there is no reason to come back below here because we're already coming off of a weekly fair value gap. There's no reason to come back lower than here because we're already coming off of a monthly fair value gap. So the daily is in context of the weekly is in context of the monthly. And the 4 hour right there, that is where you need to be aware of that you're not getting trapped right there. You're waiting for the daily fair value gap right there. And once you have this going for you, this you can probably tell right now. From this low to that daily context right there, to that daily context high. And why do I call it a context? Because when you're trading in a context, you're always trading from a daily, not specifically a daily. When you're trading in context, you're always trading from a discount array to a premium array. Ideally on the 4 hour, daily, weekly, or monthly. Unless you're using a flow trading plan, then you're using the 1 hour. So this right there, from that low to that context high, so that context low in the form of that daily discount array to that daily premium array, that is your absolutely highest probability price action there is. Why is that as well? Can we make any bearish arguments right here with the monthly in context, with the weekly in context as well, with the daily in context with the order flow lags right there being confirmed? Is there any bearish argument? We don't look to the left, so ignore this, please. There is no bearish argument at all. Nothing. So right here, you want to use every single 4 hour discount array here, and you want to buy, and you want to make 50% right here. I'm exaggerating, but you want to absolutely milk the living shit out of the high probability conditions. And the reason I'm saying that is because when low probability conditions like these come around the corner again, because they will come, you will not have a reason to now switch strategies. You will not have a reason to get in the market because you already made your profits. You don't have a reason anymore to even look at the market because you're a sniper. You're waiting for that high probability price action. And when you see it, boom, you execute. And that is what you want. And in the low probability conditions, it's extremely scary. Why is that? Because you can take from me, and if you watch the data update, actually, which we have, then you can take from me that I'm very picky about my price action. And that's what I'm trying to teach you here. That's the whole premise of what we're doing here on the higher time frame. So this leads me again back to the question, why are we doing this? When we have high probability conditions on the higher time frame, that is when we want to get involved. And that is what we just went over, where we have only one argument, and that is we're either bullish or bearish, nothing in between. 90% bullish and 10% bearish is not enough for me. I want 100%. I want to be absolutely convinced. No doubt in my mind that we are going higher. That's what I want to achieve. So how can you do that? Again, bullish and bearish arguments, which we'll also touch on in the filtering process video inside MMP later on. Don't worry. So why are we doing this? Because when you can recognize high probability conditions, that is the biggest skill a trader can have. The entry model, again, the entry model is just to get in sync with the higher time frame. That's the only thing it is. It's not doing the job. The higher time frame is doing the hard work. It's doing the job. That is very important to understand. And then as well, when those low probability conditions do happen, what you'll see a lot of the time is that people, they can make profit. People can make profit. No worries. Everyone can make profits. When it's a high probability condition, everyone can make profit. But nobody can recognize the high probability conditions, because when you can recognize the high probability conditions, you can also recognize the low probability conditions. And when you can recognize the low probability conditions, you know when to stay out of the market, because you know in those conditions you will lose money. Which means if you lose money in low probability conditions, then of course you will blow all the profits that you made in the high probability conditions. That's why it's so important. And if you're switching from strategy to strategy to strategy, then you will always have different low probability conditions and different high probability conditions. So don't try to figure out how to trade the low probability conditions. No, because what you're doing right there is you're forming a new trading plan, and you're forming new high probability conditions for yourself and new low probability conditions for yourself. And then you can see it's an endless cycle, because you will never be clear on your high probability conditions. You will never be clear on your low probability conditions. All you're doing and all that we are doing here is trying to create your unique trading plan. And your unique trading plan needs to have set high probability conditions where I can ask you in 2 years' time, do you know the exact same high probability conditions that you had 2 years ago? And you would say, yes, I do, because I didn't switch from strategy to strategy to strategy. Because if you do that, then of course, the thing, again, I want to emphasize on this one more time. When you have a strategy and you notice you are losing in low probability conditions, it's not that the strategy isn't working, you are not working. It's because you are in the wrong environment. You're trying to get involved in low probability conditions. And why is that so important to understand? Because if you're then trying to fix your strategy and trying to implement changes, what will happen? When you implement a new change, then obviously you have a sort of a new strategy, and that low probability condition that you were trading in with your previous strategy, that low probability condition might now be your high probability condition, but your previous high probability condition on your previous strategy will now be your new low probability condition. So you've just switched it around. And when you keep on doing that, you will never make any progress. You need to understand the root causes of these problems. That is very important. And you can take a look around you on Twitter, on Instagram. All these people are doing it. Again, I don't like to compare. I don't like to compare because it leads to polarizing, etc. It's not good. But I want you to just keep an eye on it. When there's a tough time in the market, someone comes up with a new concept. Boom, turtle soup. Reaper for value gap. Boom, boom. Do this, do that. What happens? A new cycle starts of previously high probability condition traders that had a high probability condition in normal trending trades. They now become high probability condition in seek and destroy conditions or less favorable conditions. And then when the high probability conditions they had previously come around the corner again, because they will come, then all of a sudden it doesn't work again. And the hype starts again. So if you want to make a great following on Twitter, Instagram, I just unlocked the code for you. And the reason I'm telling you that is, again, because I don't want you to abuse it. Again, don't abuse that. Don't do that. It's very wrong. It's not good, because you're basically just lying to people all the time, right? But the reason I'm telling that is to make you aware, because this is a mindset game. It's a mindset game all the time. All the time. You need to have patience in between the high probability conditions, moving from high probability condition to high probability condition. You will have low probability conditions. And that is where you will likely mess up. Either your mindset will mess up, either your risk management will mess up, which go hand in hand, your mindset and your risk management. And then, well, if you're unlucky enough and your mindset is truly very weak, then you will hop to the next strategy. Now, I'm sorry this became sort of a rant. This is very important to hear. Again, not really sorry, but so why are we doing this in the first place? Again, that is important to understand. Just fix your mindset and tell yourself there will likely be more low probability condition days than high probability condition days, because that is true. That is true. And that's for every strategy out there, believe me. So then here, why are we doing this? all we've done this week, and again, tomorrow we will be putting it all together. What we've done is here, we are constantly creating a boundary to go into the lower time frame, because when we have these contexts, and we have the context from the 4-hour fair value gap to now the next premium array, which could be that order block right there, 4-hour discount to the 4-hour premium, that in between that area, right there to that low, to that area, that is where you want to get involved, because that is the highest probability. And all you're doing on the higher time frame is you're predicting constantly the next candle. On a weekly basis, where will the next candle likely go? On a daily basis, where will the next candle likely go? Based on candle science, if we have a candle like this, then the next candles will likely be bullish, right? If we have one candle like this, respecting that fair value gap, the next candle will likely be bullish, right? That is where you want to get involved. From that low to that high, that is your highest probability conditions. And when you're in context of every time frame, because the 4-hour here is in context of the daily is in context of the weekly is in context of the monthly, it's extremely hard for you to not make profits. But can you keep those profits? Can you keep on repeating that on a yearly basis? Every time, can you find the high probability conditions? And finding the high probability conditions is not that hard. But can you wait for it? Do you have what it takes right there? And it's very few people that have what it takes. And that is very important to understand. So all that we're doing, these discount arrays, they are where we want to be looking for lower time frame entries. Those are our boundaries to go into the lower time frame. So first, we are establishing bearish versus bullish arguments. Do we have high probability conditions on this pair? Yes. All right. Where are we likely continuing higher from? Based on order flow. Perfect. We have context because we are moving from daily to premium array. Or if we're bearish, premium to daily, premium to discount array. And that area is where we want to get involved. That is what we're constantly doing. We are creating boundaries, and you can see moving from video to video here, we are now creating a routine. We know the concepts on the higher time frame. We are now creating a routine. So tomorrow we will go over top down, creating a routine, and slowly, what are you doing? You're forming a trading plan. So all this is leading you to a trading plan, which of course will only be fully developed at the end of MMP. So at the end of the 4th week. That is important to understand. Just because we had high time frame, just because we're having execution next week, and just because we have psychology the 3rd week, doesn't mean that you dive into the market, because MMP is also crucial because we touch on higher time frame again and certain things, the certain day where you want to get involved, etc. So that is very important to understand as well. So I hope this made sense. Again, I've written down my list. Let me go over it here as well. Right here. Why are we doing this? To create a boundary, etc. To go into the lower time frame. When should you go into the lower time frame? Exactly when we have that context from that daily. Sorry, again, not daily. From that discount rate to that premium rate right there, or premium rate to the discount rate. Every time frame in context of the one above it. Again, that doesn't have to be right. We don't have to always have monthly context, but ideally that is what you want because that is the highest probability. Then we have unfruitful price action. Again, bullish versus bearish arguments right there. You want to be 100% on either side of the market. I remember the mindset talk that we had. All right, perfect. Thank you.